Good morning, everybody. The world is upside down. It's earnings season. So, of course, we have to bring in Adam Mesh to tell us what's going on. So, Adam, I think we should start by quickly recapping what we talked about last week, which is probably the biggest thing people want to do during earnings season that you absolutely do not do. And what is that?
Take guesses into earnings.
And why?
Because what we said was this. Remember the question I asked you? I said, if you went out to lunch with the CEO and they told you what their earnings were going to be, would you think you would make money from it? And the answer was no. Like, it wouldn't benefit you because you don't know how the market's going to react. Good morning, Carl. So that's the philosophy, is like we don't know how what the street's expecting versus what's going to happen. So there's so much randomness to it. I like what Sosnoff does. He'll sell out of the money calls and puts, just looking for a move to stay within its expected range. That's like a mathematical strategy that over time, if you're consistent, will win. You can't just try it for one stock. That has to mean that, like, you're going to do it 100 times, be wrong 10, but the 90 will add up to more. You know what I mean? But if you're just guessing, then you're just guessing. So I like trading after earnings. So SoFi yesterday had earnings in the morning, pre-market. It looked strong. I bought it pre-market, sold it for a profit. Then I saw it start to come off during the day. I bought puts and I made money in puts, and I didn't have to gamble on what it was to be. And I looked, and even though it went up a lot, it went up what the options had priced. So there wasn't, like, even if you were right on the right side, I don't know how you would have been right, because all the options, like if you bought calls and the stock was up 80 cents, those calls into earnings cost you 80 cents. So maybe they were up 10, 15 cents. And if you bought puts, you were wiped out. So the risk was definitely greater than the reward. Afterwards, I bought really cheap puts. I got a reversal in SoFi. My reward was greater than my risk, and it was an easy trade just based on momentum. I bought the 1350 puts yesterday for 27 cents when it was trading at 1380, and sold them for a bunch more. So it's good. And today I'm down a little bit, but I'm trading Starbucks. I didn't own it going in, but now I'm like looking at it thinking, okay, this thing came off its lows. So we'll see what happens. It looked like it was going to go at it in. I own the 81 and 82 calls for 40 and 20 cents. And then I own the 76, 75, 74 puts. So I'm just looking for an extreme move in Starbucks either way.
And those are our options for this week?
For this week that I bought today after the earnings.
Okay. Well, everybody, let us know in the chat where you are from. We have somebody named Burger from Chile, which is quite interesting. That looks like evidence that we are in the simulation. Our friend says, I want a crystal ball so I can make money night and day nonstop.
I like your graphics, Mike.
Thank you. I appreciate it. Very, 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 very fancy here. Okay. So now, when you're looking at the next 2 days of reports, because there's a ton of them coming out, we have Meta, Microsoft, Amazon, Apple, Qualcomm, KLA, Tencor, a whole bunch of others. Now, do you sort of look at these names before earnings to sort of lay out scenarios afterwards, or do you just sort of play it by ear after?
So, listen, it depends on who you are and where you're at in your career. So when I was younger, I would have a list of all the earning stocks. I would know the big ones. I would know their levels, and I would maybe want to trade them afterwards. Now I'm looking for the stocks I know I'm going to trade. So SoFi is a stock I know. I like to trade it, but not every stock. If you're a professional day trade, if you're trading all day long every day, then those provide good trading opportunities, especially on earnings reversals. But for me, no. Now I'm not looking to do that for every stock.
Okay, so in terms of I think this is a good topic because we've talked about stocks like Core Z. So are you primarily focused on these sort of like small cap and mid cap names?
No, I trade both. I always share my screen with everyone, so everyone can always see exactly what I'm trading. Like I'm in an Uber, Starbucks right now. But then, yeah, I also have like that Core Z, which I'm hooked on. And that's interesting because that has earnings May 8th. And it's kind of like I have to hold that one into earnings.
Okay, why do you have to? You're a man. You have free will.
Well, I was in it at 12, and now it's trading at 7 or 8. So the floor of 0 is not too far away. So I'm thinking there's more upside than downside. I probably will hedge. I probably will. Like they announced their first earnings ever is May 7th. So
Okay, so how do you delineate this from, because like you won't make trades specifically for earnings into earnings, but you will hold stocks into. So why not just sell it and then see what happens afterwards?
I'll probably sell calls against it so that if it wants to run up, I'll be out of it, like on a big move up for some of it.
All right, and you talked about like getting to know stocks, like specifically SoFi. How do you get to know a stock?
When you're trading it, you see how it moves in relation to the market. You see how it trades. Does it make slower grinds up or faster moves? The speed of which it moves. Just get comfortable and you start to notice things about it as you're trading it.
Do you think like each stock has its sort of its own personality, its own fingerprint?
Yeah, yeah, like the DNA of each stock is the people trading it, right? So the collective group that trades each stock is going to form the personality of that stock versus the other stocks, if that makes sense.
Yeah, it is funny though. I think Tesla is unique because it almost seems like the stock.
Great example. Great example.
But I mean, Tesla's a little bit odd. It almost seems like Tesla trades like Elon Musk lives or something because it can go down 50%. Terrible earnings, it goes up. Good earnings, it goes down. It's so volatile and crazy.
Yeah. It's a perfect example of a stock having a different personality than other stocks.
Yeah, I wonder if there would be a way to like use AI to like assign personalities or types to different stocks.
I don't know.
Based on their.
I gotta say though, I gotta tell you. So I've been doing this. The journey we went over has been long because I did start as a day trader and I would teach people how to day trade. And when I started in like working with the public instead of the private, I was teaching people how to trade stocks. And then I evolved into options and other different strategies and stuff like that. And we were always doing different kinds of option trades. And then kind of in this act, when I got the company back and teamed up with T3, I was like, I only want to have one service where I can make whatever trade I want. And I was excited to do it because I had always been stuck creating more and more services. There was the need for more products, more services. People wanted more. And I got into this groove with what I'm doing now. And it's the most fun, best performance, not the most money we've ever made. We've had some more aggressive services at times. The most comfortable and consistent service. Because we had a market that's been down a lot this year. But our strategy is we own stocks right now, but we kind of like started small, like with a small account and used our wins to add more positions. And we would sell puts to take ownership. So we're not just buying a stock ever. We're selling a put. If we get caught with it, we own it. but then we would sell calls against it. And a lot of stuff we have is dividends paying. And so during the whole first couple of months of this year, where the market's really been weak, our portfolio was getting hit. It was like a ship where the defenses were sealed. It was getting hit, but then the dividends would come in, the premium collection would come in. And so the cost basis of all these stocks, which is really what we're focusing on, would hold. And then as soon as you get like the last week we just had, not today, obviously we're down, where the market rallies for a couple of days, it's just like this massive swell because you absorbed all the hits the market could give you with premium and dividend collection, and now you get the capital appreciation. So we have a portfolio that's performing really well. And literally, we're going to own some of these stocks the way we've traded them at a zero cost basis. We're going to get to that goal where you're going to look at things in our portfolio and our cost will be zero. And so that means that anything you ever do in that stock will be profit, which is, I feel good about it. Like, especially if you find like some of these cheaper ones, like a great example is MVST. They make batteries for cars. Okay. So MVST is a cheap stock, but it has good volume. And we started by selling a $2 put for 30 cents. So our cost basis was $1.70. Okay. And then we took ownership of it at $1.70. Then we sold a $2 call for 15 cents. So now our cost basis is $1.55. And then we sold a $2 call for September for 30 cents. So our cost basis is $1.25. You know, and the stock's trading at $1.87. And it really had gone as high as $2.30 already. So like a couple more premium collections, we're going to own MVST at zero. And every time we collect premium or don't, whatever it does, it's all profit. We're doing the same thing with YMAX, where we get the dividends every week. With BITO, it's even better. BITO is a stock where we sold puts to take ownership, we sold calls, and we get dividends. So it was everything with premium collection. And so, yeah, for this service, for what I'm doing, and now we have an Uber, which actually is doing really well for us. We're in Uber here, which I love. That's my stock of the year. You know, Palantir was last year. Uber is my stock of the year this year. I love Uber. But then we also find some of these other, like we were in Qubits at, so here's another one. Ready? We bought Qubits. Our initial purchase was $1.92, 200 shares. And then we sold 100 at $3.65. So pretty much right there, our cost basis is zero. And now we've collected 70 cents and 50 cents against the stock we own in Qubits. So we're at we're literally, every time we add anything to it, it's above zero. Cost base is zero. So it's a really fun place to be when no matter what you do, you're at the zero cost basis. And it's more than one stock we did it in. JMIA is another one where literally it's a stock we just need to stay in business. It's a $2 stock, and we've collected we started getting in a little higher, but it's a $2 and change stock now, and we've collected over $2 in it. So this one too is we're going to own a zero, and I could keep going.
I mean, do you ever do you ever feel like it's cheating in like a fun way? Like you're kind of like getting one over on the system?
No, I feel like the benefit is that I have this group that I put on the trades for, so I'm disciplined. So I feel like discipline is the word right now. So I feel professional. I feel like it's professional trading, and like that group thing. So we have the ability to do it together. But like, it took me a long time to get to the point where I realized what strategies I'm really comfortable with for a group, where to get to that zero stress, where like nobody's writing in like, I hate you. What did you do? These trades everyone's in on the game plan. They're in it for the long haul, and it feels good.
But is zero stress, I mean, is that even possible?
Yeah. Because you have a good plan, and you know what your worst case scenarios are. You're comfortable with it. I mean, I don't want to jinx it. If something crazy happened, I mean, this portfolio this portfolio isn't going to give you headaches, but zero stress in life is probably not possible. No.
Might not be good either.
All right.
Okay, I want to go back to Uber. So what makes Uber your stock of the year?
I love the way it trades. I love the number of balls they have in there between like, like if you look at Waymo, right? So we're in the financial business, right? Where we have people like me, and T3 has a bunch of gurus, right? Scott Redler and Sammy and all those guys. We're all personalities that you have to manage, right, within your universe. And it takes time to manage them. And because we're good, there's a cost associated with that, all those things, which makes the business more expensive. Now, imagine you had robots that you could have to do our job, and other than building them, there was no cost and no upkeep, and how much easier that gets and how much more efficient your business gets. Like, that's Waymo right now. These driverless cars, as we go to the future, you're going to eliminate costs. It's going to be a better business. Uber's going to go in that direction eventually, which is going to be ridiculous. They also really have a foothold in the Uber Eats in that business. So they have multiple businesses right now. There's still a technology play with so much data on so many customers and they trade at a lower multiple than most companies of their size and stature with all their outcomes. So in my head, I just see it as $120 stock. I keep saying I think at some point this year, Uber's $120 stock. I probably don't have enough of it for what I'm saying, but I feel like I missed the first leg. But like, it hasn't even looked bad when the market got bad. It just looks good. I guess it is a $165 billion company already, but what's the PE? The PE is 17. Right?
You know what I find really interesting about Uber, Adam?
What?
So I'm going to pull up a headline on the screen. Hold on. Where is the?
By the way,
it gave me. I actually got a pop-up blocking, but yeah. Okay. All right. So StreamYard is broken. So, all right. So basically, so Gen Z young people, few of them are getting driver's licenses. That is a major secular trend in society. Just less young people are getting driver's licenses, and it seems like Uber is probably the biggest beneficiary of that.
Well, let me ask you a question. Ready? Like, honestly, why would Tesla be worth more than Uber? What is Tesla doing that makes them worth more than Uber?
Possibly in a bigger market, mostly because I think Tesla is perceived as having proprietary technology and magic. I think there's also a big Elon Musk premium, and it's the show. Tesla puts on a show and can get people to imagine big things in the future, whether those things are realistic or not.
Who do you think Tesla would partner with for wireless, for driverless cars? Uber, right?
I mean, I haven't delved that much into that market, but Uber's got to be on the short list. They had to have discussed it.
So Tesla's market cap is $905 billion, and their PE is $160 billion. And Uber is 17 PE and $165 billion market cap. Ford is a $39 billion market cap. So I just think Uber, for who they are, the foothold they have, over the next 5 years, will Uber be $1 trillion company? Yeah. I think so. At least 500 billion.
I mean, if there's one thing to bet on in society, it's convenience. It's everything. I mean, Google, Amazon, Apple, like anything that makes things more convenient for people. I mean, you could even look at like Eli Lilly, the GLP-1 drugs, like anything that makes your life simpler at the touch of a button or the drop of a pill. Seems like it does well over the long run.
What did you say? Uber has its hands in everything. Tesla can instantly turn all its cars into a Waymo. They just need their owners to click a button. That's what's nuts. Partner with themselves. Tesla can devastate Uber if they choose to robotaxi on their own with their own fleet. That's interesting.
I mean, like Uber does have the advantage that everybody has the app on their phone already, and they're used to it.
I just think, yeah. So I think.
I mean, it does seem logical that, like, let's say hypothetically, I own a Tesla. Like, can I basically sign up my Tesla instead of myself as sort of the driver through Uber? I mean, it seems like the easiest solution.
Right. Right.
Okay, so I want to
Tesla's already valued for that. I think Uber will be a lot higher, and sometimes that's just like, listen, I'm not putting all my money in it by any means, so who knows? You know what I mean? But it's just that feeling that you have that it's like it makes me want to be involved.
Okay, so with the situation with a stock like Uber, where you have more of a long-term outlook and a thesis on it, is that the type of stock where you will just own it and not pay attention to it, not sell calls or puts? You'll just let it fly?
I'll sell calls against it. In our service, we sell calls against it. In my personal, I have like a couple hundred shares. Like, if I keep the position small enough, I'll just hold it. If the position becomes too big, then I'll start to overtrade it. So I'm trying to keep it small enough that I could just hold it.
Okay, so all right, so I want to talk a little bit more about Mesh Prime and how you're managing all these positions, because it sounds like a lot of activity. So how many names are you focusing on at a time?
So the portfolio has been built over a year plus. So like right now we're in 10 positions. But like we made one or two updates yesterday, like where we did a roll or an action. It's not a lot of actions every week, and it's a lifestyle service. It's not sitting in front of the computer all day long, not doing earnings trades. Yeah. This last trade we made, we did a credit spread in ASTS. We sold the May 16th, 2017 put, and we collected $1. And we could have closed it for $250 profit, but we didn't. And did we do it for $1? Yeah, we did it for $1. And
so it's interesting because it sounds like you're using a portfolio as a cash machine.
Yeah, we're collecting premium. We're collecting premium. We're collecting dividends and a bunch of stuff. We're making sure we get paid each week, and that's what helps. Like in YMAX, you get a dividend every single week. In BIDO, you get that monthly dividend, but it's like $1. So think about BIDO for a second. If you get $1 every month, and it's a $20 stock, in 2 years, as long as Bitcoin is between 70,000 and 120,000, you're gonna own it at zero. So I like that. I don't want to say whether Bitcoin's going to be at 70,000 or 500,000. I'm just saying it's going to exist, and then eventually I'll own it with zero cost.
All right. Do you think? I think dividends are an interesting topic because we don't really they don't get talked about much these days. But I mean, dividends are kind of fun. It's just like, I don't know, because I have a bunch of my stocks in like drip programs where they just buy more every single time. And it's just like, it's nice to see that number like creeping up over time without doing anything. Do you think people like don't pay enough attention to dividends these days?
I don't know. I love having, like, on my personal investments I collect dividends through bonds and other areas, and it just really adds up over time is what I've learned. So if you're playing the long game, which we are now, if you look at this market, it's like it looked so good for the last 3 days. It looks bad today. That's going back and forth, trending up. The dividends just you put in your pocket and you keep going. And it adds up. It adds up. Like Monopoly.
Yeah, and if you guys want to get a look at Mesh Prime, there's a link below down in the description. Go down there and click on it, and you can learn more about Mesh Prime. So what kind of people join this service?
And by the way, we didn't come on here. Yeah, we didn't come on here to, like, the purpose of this call isn't to be selling things. Like, I love just talking about the market and doing things. It's just that it's just like that's what's on my mind right now. Like, we had a great call yesterday. I feel really good, so that's why I'm talking about it. But
no, I've done. Listen, I probably do 150 events of some kind every year. We haven't talked about dividends one time ever.
Oh,
and
really?
Even selling options doesn't really come up. So I do think I think this is a good topic to get people thinking differently, because not everything is just buy Apple here, sell it there. There are other ways of doing things. So we do want to expose people to new ideas and new ways of operating.
Yeah, and it's working, which feels good. And the people that do it, it's like a lifestyle trading service. The people like to check in, manage their own positions, update them every week, who like trading options. A lot of lawyers, doctors, engineers in there.
Okay, all right. Out of all these professions, like, out of non-traders, who tends to be good traders and who tends to be? I've heard bad things about doctors and dentists, but like, are there any fields where people are particularly good or bad at trading?
Engineers are more very. You could tell when people are engineers because of the way they want to understand things and the questions they ask. So engineers have always stood out to me with the way their mind works. A little different than everyone else. And like, I could know from the questions at this point if someone's an engineering background. But no, other than that, I think it varies by person.
I mean, do you think personality type is more important?
Yeah, I do. Like either rule followers, or you don't want people that take on too big a size. Everyone, like, it depends on what your vices are. Meanwhile, the market has come back nicely from where we started. This was another day to buy the balance. I mean, I don't know if we're going to come all the way back, but the Qs were at a low of 462. They're above 470 right now, right at 470. And they're like one big power move away from positive, which honestly is pretty impressive. Pretty impressive. This would have been, I'm glad I came in. My game plan today was we've had a good couple of days. Don't look to follow the shorts down. I honestly wasn't looking to buy the rally either. I was looking to just maintain and look for some healthy, good trades if things were standing out. I didn't realize it was a buy the dip day again today, which that would have been the move in the morning. But I didn't sell anything. Yeah,
I mean, I mean, do you find yourself feeling like you're getting whipsawed by the news? And it's because it's like we're getting like,
no, not anymore. I was the one time I got off balance was the way we reacted on Liberation Day. That caught me a little bit off guard. The extremity of the move down, based on what we knew it was coming, just based on what he said. That was the one where I got caught off guard. everything else, I feel like I've been fine. Mark said, yes, an engineer or mathematician is better suited to see the probabilities and estimated numbers on the fly. Would you buy weeklies in Uber?
Yeah. So it looks like our friend Jay Swizzle is looking to gamble. He wants some action.
Well, when is Uber's?
They report on May 7th, it looks like. So next.
Yeah, so so for us, we own the December 1975 calls that we had bought for $14, and we've been selling calls against them. So for this is a long-term play. I don't want to be out of it into earnings because, this is a long-term hold and earnings could be a big move. And if it went down, I'd still be fine holding it. So we bought the December 1975 calls for $14.40. And this was in February. And then we sold the 83 for $1.20, the 85 for $1.21, the 80 for 77 cents, the 78 for 96 cents. And we just sold the July 18th 85 calls for $1.96. So even though we bought the December calls for $14, 243 for 6, we've already collected $6 in premium. So our risk is down to $840. If it goes through 85, it will be a really nice win trade. We'll do really well because at 85, we'll probably, make 60-70% on our money on the investment, and if it goes down, we have July, August, September, October, November, December to keep collecting premiums and stuff like that. So we're in a really good position here because it withstood the down move in March. Like we bought those 75 calls on February 11th. Think how much the market's down since then, and we are up in this trade nicely. Right? That's a well-managed trade. Uber really hasn't moved. Which is impressive. By the way, very impressive that it hasn't moved. But we've collected so much premium in this thing that then it's okay to hold into earnings.
Yeah, especially when you consider what's happened to growth stocks in general this year, they've been crushed. So well done.
Jason, can I do these sells against the owning without having the underlying stock? Not a huge account. Well, yeah, that's what we did. We did we bought the December 19th calls instead of owning the stock. Yeah.
Yeah, I wonder, Jay Swizzle, do you mean just selling naked calls? Is that what you're referring? I think that's what he's referring to.
No,
I'm not sure.
No. Well, I never sell naked calls. I never sell naked calls. And I definitely wouldn't sell naked calls in Uber because that's a bearish mindset and I'm bullish it.
All right. Okay, folks, this is going to wrap us up. The call for this week is Uber.
And by the way, it's up today.
Yeah. Jay Swizzle, I would say
think about what the market's down, by the way. And it's up today.
It's always a good thing.
Impressive.
Okay, guys. All right. Click there's a link down below. You can look at Mesh Prime. Click the link down below and you can learn more about what Adam does. Adam, thank you for coming on.
All right. Thank you.
Talk to you later. Bye, guys.